If you're watching this video, hopefully you've read the title. In this video here, we're going to be starting a series on how to trade in the stock market. This here is going to be a basic introduction into our three most important indicators, which we use on a daily basis, and that is the MACD, the MA, and the RSI. So the MACD is the first thing that I would like to talk about, and this is a momentum indicator, which helps to identify bullish or bearish momentum. So if you ever see me talking about a bullish or bearish signal, one of the things that I consider is the MACD, because I use this sometimes to determine whether something is oversold, which would indicate a buy region, or overbought, which would indicate a sell region. So the reason why I'm talking about this in particularly is because these three indicators that we're talking about are your pro and con kind of thing that we've mentioned before, where you line up all the aspects, you line up all of the facts and weigh them up and make your determination as to whether the setup is favorable or not. So using the MACD alone, some people find to be a trading strategy. If you pay attention to the volume and you have your time frames set appropriately, it can really help you find ideal intraday entries and exits, sometimes several times in the same stock, but oftentimes you could find at least one good setup a day using just the MACD. So the next thing that I would like to talk about is the moving average and how important it is to day trading and short-term swing traders. So the moving average cleans up the chart for you. Whether you're looking at a 4-hour time frame, whether you're looking at a 15, 10, or 5-minute time frame, it really doesn't matter. Oftentimes the moving average really cleans things up if you adjust it accordingly. This here is a 15-minute chart intraday, and this is a 20-day moving average. And I find that the 20-day moving average is just long enough to show a reliable trend in the price, but also just short enough to show you the aggressive price action associated with the stock intraday. And many people actually find that using the moving average alone is a strategy to trade, and they often look for a green solid candle. Obviously this does have a pretty big wick here, but a nice green solid candle that closes above the moving average, and a exit that they typically find to be at least a stop loss type scenario would be if it closes through or below the moving average. However, I find that a lot of people, if you use the strategy, yeah, it does work, but a lot of the times, you can get, first of all, you could get a fake out. For example, if you look right here, you can kind of see an example where it was very short-lived. The strategy doesn't work all the time, but it does work if you pay attention to inflow and outflow and pay attention to the volume for the day compared to the amount of free float associated with the stock itself, the amount of shares that are able to be bought and sold for the day. So obviously this does work as a strategy, but there's no point in waiting for this moment here. By chance, a lot of the times you end up in this situation by waiting for more. I always say that it's best to just take profits when you're comfortable. I find that if you wait longer, you're going to lose more, and this definitely is true for quite a lot of traders. It is not wise to ever get greedy in a situation where you're profiting. And what I like to say quite often actually is, if you have to ask somebody when to buy, or when to sell rather, you probably should sell. You probably shouldn't be holding that stock if you don't know what you're in for, if you don't know why you should be holding that stock, or if you don't know, hey, in 5 minutes this thing really could just fly straight down 15%, no big deal. I could lose all the gains that I'm looking at right now, or I could lose half the gains that I'm looking at right now, or I just bought at the top and definitely missed out on the opportunity. So there's many things that the moving average really can kind of help you with, but coupling all of these things with the MACD also really helps to add things up. So this is a pro and con type situation where you want to weigh everything and determine whether there is a more probable and more favorable setup where you could actually realize your gains. Alright, for those who do not know, the RSI is the relative strength index. It too is a momentum indicator. Now, this one in particular tracks the speed of the price change, so it's pretty aggressive in terms of the very, very short term, but however, it can be applied to the long term as well. So this here is a 4-hour chart, and it shows the stock NILE trading along the MA, acting as support for some time before breaking through, where the MA later acted as resistance, and then likewise tested a region of support in this horizontal channel where it failed, tested it as resistance where it failed, and then appeared as though it were going to try to reclaim the MA again, coming back up, but likewise failed and came back down to find a pretty solid region of support all the way through here. Now it did break above the MA right here, which to me is pretty good considering, yeah, it did break below it again at the end of the day, but it did show strong sentiment to want to bounce off of this region of support again. Now, if you look down here at this text box, you can kind of see the RSI does indicate that there is a bit of momentum, although it did stagnate down. I think that it is a good chance, if we do test this area of support and confirm it, that we could find it does start moving back to the upside. Some people do use the RSI trading strategy where they will buy at 30 or lower and they will sell at 70 or higher. Now, I personally wouldn't recommend that you do this, and you should never rely on just one indicator as your sole reasoning behind a trade. You should factor in as many positive indicator signals as you can to determine that on your own. And another thing too is that if you're going to try to rely mostly on one indicator or another, you really need to pay attention to your time frames, and also you need to pay attention to the average volume, the free float shares available for that stock particularly, and the price action for the day. Are we above the moving average? Are we in or above or below a horizontal channel? Is there sentiment that this stock could possibly rebound? Could it bounce off of this support region? So all these questions you ask yourself, and then you start looking at indicators. You start, trying to look further than the MA, start looking further than the RSI, start looking further than the MACD, and you really can paint a better picture for yourself. So hopefully, if you're new and you haven't seen these indicators explained before, or maybe at least not explained in the way that I presented them to you, hopefully you learned something new. If you did, let me know what you've learned. And if you would like to learn something new or expand on this, we will be doing another video just like this next week, as well as adding on to our options trading series, where you can find this video here to get started on the basics of options trading.